Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx, and look at this beautiful 1-50 trade, 1 pip stop loss, 1 minute trade on the 5 second, actually I think it was a 1 second entry with a 50 pip run, 1-50, holy grail. Learn to do this every single day, no big deal. Join the mentorship, and actually that's not how trading works. Now, the reality of trading in a way that allows you to catch and capitalize on moves that look like this is that you have to go through the dog shit and through the gauntlet of taking multiple stop losses, taking multiple break evens, taking multiple commission losses or spread losses, and taking, in some cases, prolonged periods of losses or drawdowns to get yourself to a point where you actually can catch a trade, and then after that, be able to manage it in a way that overall creates profitability for yourself. Now, the interesting thing about being a trader is that you don't need a high RR system to be profitable, and you also don't need a high win rate or low win rate strategy to be profitable. And the cool thing about smart money trading and the way we trade smart money is that smart money also does not have to be a high RR game, nor does it have to be a low RR gain. If you've watched my channel for a while and seen some of my other videos like institutional orders or anything else, you know that we can, for instance, go and watch the candle runs of specific buy or sell stops and look to enter on actual candles throughout the week and use those candles to then target future liquidity, right? And this is actually a very similar way to how banks and large institutions actually look at orders and look to fulfill those orders on each end, right? So they do this on a much higher scale with a lot more algorithmic and intricate price action entries on lower timeframes. But this is the overall way they view price and how they view liquidity runs. When they see liquidity runs on the lower end, they look for ways to unload some of those liquidity runs, or where they can unload their own liquidity, which usually ends up at other areas of swings, which also form as, for what reason? Because buy stops right above them and sell stops are right below them. I'm not going to get into this right now. Feel free to check out any of my other content on this YouTube channel to understand this. And notice how doing something like this requires a very low RR, but is probably going to have a much higher win rate, because the understanding behind it is that, you know, if we've ran this high and we are entering, let's say, on this entire down move, we know that this down move should at least aim for the liquidity that rests at this low and at this low, right? So this could be your first partial right there. And then you can maybe get hit break even. And that could be an easy 1 to 0.5 or 1 to 1. Now, again, it doesn't seem like much if you're on a lower account, but if you have a multi-million-dollar account, or if you're a bank and you're handling billions, or in some cases, multi-billions of dollars a day, and shuffling it through a market, especially on the higher time frames, the way you need to recognize is that 1 to 0.8 RR win is a risk of over, maybe let's say $1 billion or, $25 million. So your take profit or your first partial ends up being, if it's $1 billion, ends up being about, what is that? $800 million, right? And that's not that bad of a week for a bank. So the way you have to think about the market has to be in terms of RR, and never in terms of actual money gain or balance gain, because you need to think about it in the terms of scaling. Now, let's go back to our specific entry here and let's talk about it. So are RRs like this possible? How does this happen? And I mean, the answer is always, of course they are. But if you don't have the precognizant understanding of everything that has to happen beforehand to catch trades like this, and the type of mentality and the type of rules that you have to have outlined for yourself to catch this, then you're not going to be able to do this consistently, nor are you going to be able to understand ever how this is done, especially when you are sold by a lot of good marketers, or by a lot of other courses. I'm not going to name anything like that right now, but when you're sold by a lot of other courses and marketers that are ours like this is possible with like the highest win rates, and it's all good and you can just catch it nonstop, back to back to back every single day, ping pong, it's ultimately bullshit in my respective opinion, and not financial advice, of course, fully opinionated there. But The reality of this is if we take a look at my actual trading day yesterday, so this was during Asia time, during these 6 hours right here. So that's the 6 hours I outline for myself usually to look to get involved. That's just the way I trade. I like to trade Asian session just because at this point I've been testing it a lot. So I'm more confident in going in during the Asian session, and it's a good time for me because usually during the day I'm working with the community members. I'm working on the prop firm, which by the way is absolutely phenomenal. We're doing absolutely great. We've had our first funded member. Actually, we've had our first 2, but I'd like to congratulate on my own channel our very first funded member. So congrats, Paul. I know you told me I can say your name, so congratulations. This is what the certificate will look like. And if you want a chance to participate or to be a funded member with mentfunding, definitely check out our fund after you have taken the time to perfect your rules and strategy and your understanding. Now, what's interesting is actually yesterday, let me see if I can find this very quick. Yesterday, I had a video that I was recording for you guys that I was going to drop instead of this one. And that video was recorded during this time right here when I got into this original buy. So let's go to the start of this day. We can kind of work through it. You can see we started with a somewhat bullish structure, and within that bullish structure, we were creating those SND zones 2.0 that were all becoming mitigated and continuing to create this inner structure at the top side. And you can see as we did this, I actually looked to get involved right here. And that instantly hit break even. I mean, not break even, sorry, hit a -1. So it took a -1 right there very quickly. And then we had a new setup that I looked to take. And this was actually targeting a significantly higher point. So this only got around 1 to, how much was this? 1 to 4.4 RR max. And then came right back down to break even. You can see I have that written out right here. So I had a -1 followed by a break even. Now, already, as we're talking about this right here, you need to see how important it is to have rules and then not diverge from those rules. It's very common for a lot of traders to make the mistake of getting involved in areas, taking the loss on a trade, for instance. Like you might have that first part down. You're like, okay, here I am. I'm a good trader now. Let me go get funded with FTMO or with mentfunding. By the way, if you want to get funded with mentfunding, here are our very, very nice and low spreads. So just check them out so you know what the spreads are. And here's the list of all the shit we offer. Absolutely awesome. So yeah, if you want a chance there, go for it. But what happens is a lot of people can start getting involved, and let's say they start to go get funded and they have their account at break even, it's at 0 right now, or like they haven't won or lost, and they take this first loss, and they take that first loss and they're like, shit, my equity curve, it's not going upwards. I don't like that shit. So what they're going to do is when they get involved in this trade, right, now they know that their first profit, let's say if you're trading the exact system I'm trading, they know that their first take profit should be, let's say, up here. But what's going to happen is as this starts going up and their equity curve starts doing this, they're going to close that trade. And they're going to be happy. They're going to be back at break even. And they're going to think they did something well. They're like, okay. My account reset. It's all good. It's all good. Right? And now they can look for the next trade. And in this case, that would have paid off, right? This comes right back down to break even and they'd be like, yes, I would have been here. Now I'm here. I'm a money maker, baby. So they're going to feel really good about themselves. And this is a self-fulfilling prophecy at this point, because what's going to happen, and this cycle is the exact cycle that deteriorates almost every single trader. Their trading accounts, blows their accounts, especially when they haven't put in the time to write out their own rule-based system and follow it. Because what happens now is, imagine this right here. Just imagine for a second. I know it's hard to imagine because it didn't happen, but imagine it just for a second, and we're gonna get around to something that did happen. But play along with my little shenanigans. All right. So imagine for a second that this trade right here actually did end up running here, and not only did it end up running there, it came back to mitigate some inside area or inefficiency that existed here. And instead of coming even back down to test any of the areas inside of here that might have been left behind by this impulse, right? Instead, it just took off. And instead of just taking off, it really took off. Like, not just took off, but in the form of this kind of takeoff, but on the top side. And took off to, let's say, this higher supply zone that existed on a higher time frame. We're not going to talk about it right now, but let's just say it did that. Okay. Now, why is that a problem? Well, because now, under your own entry criteria and under your own rules that you've laid out for yourself, this buy should have been a buy that didn't just run to here, right? Because remember, this is your balance curve. Your balance should have not been ending up here as a break even, nor should have gone a little bit higher just because you left a little bit to run. Instead, that balance should have went to hit this as your first take profit, which would have been somewhere here. Okay, that first take profit would have been hit. now your profit is already in, and now you're locked in at break even. Okay, now you're locked in at break even. So now maybe you're locked in here if price came back down. Okay, great. But instead, it keeps running and runs all the way up into this second partial. Or let's say it was a completion. Now you've secured a potential trade that you actually kept as a break even on your overall account and turn that into a 1 to 33, which would be equivalent to about 20 RR based on the way R partial. So this would have looked a little bit like this. Okay, great. So you passed your challenge. So what's interesting about this way of trading and trading in a way where you stick to your actual rules is that when you diverge from your rules and start to follow something a little bit different, just because, you know, it looks like it might do X, Y, or Z, that's when you begin to fuck yourself as a trader. And that is why a lot of you end up switching courses back to back to back, start bunny hopping more and more and more, switch from smart money back to retail, from smart money to a different smart money, from a course to another course. And honestly, just so you guys understand, I don't mind if you take my course, don't take my course, take another course, don't take their course. I don't care. If you're with some other course, I'm happy for you. And I think you should stick to that course until you find your own edge. But what you need to recognize is that that edge is never going to be found if you can't lay out rules for yourself that you actually follow. Now, again, play with me for a second, and let's go through an analogy of your past life and of my own past life too, and maybe of what you're doing right now. And let's say you watch this video and you see these beautiful entries I'm taking here based on a very, very simplistic 3-step box approach. And you actually can see this 3-box method in my previous video on this YouTube channel, where you look for the impulse, where you look for the S&D within that, that's 2 boxes, and you look for the confirmation box inside of it to go long and look to start targeting the highs, the lows, and continue to do that. Now, what's interesting is if a lot of you test this and go and test it in the hindsight, which a lot of us do, right? There is no such thing as non-hindsight trading because every single trader has to do hindsight in the start to understand what their edge is. So what happens is they're looking to test their system, and you know, they see this great Wyckoff entry. They look to enter that Wyckoff entry here, right? So they see this in hindsight. They go, okay, there's an entry there. Okay, my first run, let's say it'd be here, just above this liquidity. So you're looking to target this liquidity here. And all of a sudden you're like, oh, that's a 1 to 11. Holy shit, that's great. And then you look to the left, right? And then you look a little bit to the left, whatever is here. So you look to the left and you go, okay, so I would have also taken a trade here, and that would have been a -1. I would have taken a trade here. Oh, that would have been also a +10. Okay, nice. I would have taken a trade here. That might have been a -1, right? So you look at this and you go, oh, there'd be some -1s, but you look, there's a +10 here and a +10 here. So overall, I'm +20, and this is only -2. Holy shit, I'm +18. Okay, I'm profitable. Fuck yeah, baby. FTMO, gimme, gimme, gimme. Ment funding, let me do it. And then you fail it. Scam. Prop firms suck. Okay, well, this is the casual cycle of someone in the market that usually is not going to get anywhere or doesn't do anything to change this way of thinking. So it's good that you go into hindsight and into backtest and see this thing occur. But what you're forgetting to do is understand how these occur and how these are going to occur live and affect you. Because when you're doing this in a backtest, you're seeing these +10s instantly to the right side and the left side of the screen. If I show you this right now and I go and post this right here on Instagram, you look at this and you go, well, yeah, there were some losses in there were some losses in here, and there were some losses here. But clearly we know what's happening here. Clearly this is taking care of pretty much all of those losses, and if anything, creating an even higher profit on top of the account that you started with when you started trading here. But what happens is when you start doing this in live markets and you start doing it instantly without refining a rule-based approach for yourself, and we're going to talk about this rule-based philosophy in a second. When you do that without refining that rule-based approach for yourself, what you're doing is when you get onto the live charts and or even a funded account and you take this -1, just like we spoke about a second ago, let's delete all of this. Let's delete all of it really quick. Boom, boom, boom. Stay on the video, guys. I know we all have the attention span of a squirrel, but just stay on the video for me with a second. So when you're taking this right here, you're not thinking about the fact that this move here could be equivalent to the type of move that you see here, right? You don't know that this move is either A, going to just run this liquidity and go short, or B, going to go and continue to these much, much higher areas of interest all the way up here and run that 1 to 20 RR. You don't know that, right? So when you end up diverging from those original rules and taking a profit in here just to make up for that previous loss, you might be happy in the short term, but what's going to happen is more of your zones are going to not hold, or more of your POIs or S&D zones or whatever else you want to call them don't end up holding. You're going to sit there going, my mentor, he's a fucking liar. And then you're going to go on the YouTube comment, as some people do. I know a lot of you don't do it, and I appreciate you all for it. And by the way, thank you so much for 50K, guys. You guys are insane. And all this is in light fun. I love seeing hater comments. It makes me so happy. It's honestly cute. But you know, you end up not following the rule under this approach. You end up taking that loss. You end up taking that win to get that break even now. Instead of having this be up here, your bounce is at break even. And then when the -1 start coming in again, and all your POIs don't hold, and all your POIs don't hold, and again, you have a win and you take it here, but then nothing holds, and then you have another few losses, and nothing holds, and nothing holds, and nothing holds, and then you have an actual win, but you take profit here because just like this, you got scared and took profit here, instead of it going up to here like it should, as it did for me, because I actually caught the move down. What happens is you end up like this, because you start looking for more buys here and none of your zones hold. And then you go onto my YouTube channel, or you go into the reviews and you go, this is all bullshit, repackaged nonsense, break and retest, I fucking hate you. Right, and then I like the comment, I love it, and then I say something and the comment gets removed and I get all sad because now nobody else is gonna see it. So again, the main point I'm trying to make for you guys here is that you need to recognize that if you have a specific RR run or a specific strategy that focuses around low win rate and high RR, you need to go and manage that properly. Now, why is that important? Let's talk about it a little bit more right here. So this starts, I took this buy, took a break even on it right here, gets higher, look to take this buy here, instant -1 again. So I'm -2 now, and that was, you know, it's painful, but it's fine because I know exactly what my strategy is going to do. Now, again, we're coming around, we're not getting any confirms, and then we have a very nice 3-box setup. I'm going to show you this 3-box setup once because you have access to it in the other in the other video. Impulse, box, setup inside, look to take it long. Now, my first partial and my first target on behalf of this actual trade was actually this high right here at 10 pips. Now, what's interesting is I actually recorded a video for you guys last night. So I can actually open this up. Maybe it's this one.
How's it going, guys?
Fantastic. So you can see I took this video when price was in or around this area here. And during this video, what I was telling you guys about, or what I was ranting about, is the fact that I have to let go of profits and I have to let go of trades that do stuff like this, but don't meet my first area of partial. And that is because I've determined a preset step-by-step rule-based system for myself, and a similar rule-based system that I teach in the form of entry criteria that is very privatized, has a lot of structure to it in the private mentorship. So make sure you check that out in the description or in the thing right there. Right? What happens is my specific entry criteria does not allow me to take that partial unless it gets to my actual area. Right? All the price action in here, it doesn't matter to me. Right? This all I could make into a black box. So we can go, where is it? We go like this, right? And as long as price isn't above that box, I don't care what's happening inside of it. At this point, price could be in the middle, right? It could be in the middle, or it could be right there, which it is, right? It was just up there. It doesn't matter to me because my first partial under my specific entry criteria was not met. So I had to watch for about 30 minutes because I'm on the computer during this entire time since I'm scalping the 1 minute. During that 30 minutes, I had to watch price go from over 9.8% in profit, having lost 2 trades already, back down to just under 0.5 pips or 0.5% in profit on the trade with commissions affecting me, back up to over, wait, how much was this? To over 6.6% in profit, putting me above my overall losses and still not being able to take a partial or anything off the table. Why? Because my rules have outlined that I cannot do that unless my rules are met. So this price would have to have came all the way back up here for me to still take my first partial. And you'll see in this video, I kind of talk about that. Check this out here for myself at least, because that's about 1 to 4.6. It can't be here because that's about 1 to 8.5. So it has to be just above this high. Really, I had to let 8% go down the drain all the way. Boom! I had to let 8% go down the drain. Now, I don't care if you think I pre-recorded this, and I mean, you can see the timestamp on this. Oh, you can't because it's on the video, but shit. Here we go. If you zoom in on there, you'll see the time, 11:01, 9:27 p.m. That's just the time it was on. Again, it does. I don't gain anything from doing this fake shit. I don't care. I don't show anything like that anyway. So there's no trade history or anything like that anyway. All you have to do is look at this and understand what I'm trying to deliver to you and say to you, and then go and execute it yourself, right? Because at the end of the day, this is all for educational purposes only. Now, I had to forego this entire 9.8% gain and take the loss. Now, why? Some people would say, why not take it? Well, because then the exact same thing happens. The fact that you, for instance, would have taken this just to keep your account at break even would be the same reason you're taking this to keep your account now, right? Let's say above that break even point. And you'll be happy for this short term that your account is above. But when everything begins to accumulate and the specific management style that you had with your mentality going bust in this area here is going to begin to go bust in other areas. And it might work for a little bit, and then it might work for even a little bit more. But eventually what's going to happen is that mentality is going to go bust. And eventually this trade right here that should have ran to here to make a new high on your overall equity curve, right? If this is the zero line, and this trade should have been up here. Instead, what happens is you end up closing it because now you're again reset at zero. And in your mind, you're like, okay, we're good. Now we restart our trading career and we're good again. And what over time happens is the same thing happens. You close, and this trade should have ended up here. And lo and behold, a lot of your equities are going to look something like this. And then maybe, usually what actually happens is we get very emotional, revenge trade, and then it looks a little something like this. So, I'm sure a lot of you have experienced this. I've experienced this too. That's why I'm free to talk about it, and I'm happy to talk about it. But this is what a lot of you and your mentalities are oftentimes working like. What you need to recognize about yourself right now is that there's a very good chance that you're actually a profitable trader and have a profitable system under your belt. And there's a good chance, I'm guessing, that you've gone into hindsight and seen how well your strategy can work and the type of runs on liquidity or the type of runs in terms of RR your strategy can have for yourself. But you've never been able to execute upon that because every time you go about doing so, you might end up going through a period in your own system of potential drawdown before the actual move that then goes to take out the next high, or before the actual move that then goes to take out that next important swing happens. Right? Because if we even keep following this, imagine how many of you, especially on a 1 minute chart, could have been falling apart by now. And again, I don't think I'm above any of you at all. I was also a student. I'm still a student of myself, if anything, because I learn from myself every day, every time I see things happen between my students. And by the way, if you want to become part of one of the best trading communities in the entire world, one of the most active ones, right? Like, look, this is 2:18 p.m. Ready? Watch this. Boom. We go up. Let's go up more. Boom. We stop. This is still 102. This is about an hour. Boom. Very, very active, back and forth, constantly. Everybody helping, and there for you. It's amazing. I'm always in there too and talking to people. So definitely, if you want to be part of something like that, feel free to join that with the description. But other than that, you don't have to join, as you all know. Everything is provided for free on here. But we need to recognize that I'm not above any of you, and I have gone through the times in my own life where I wouldn't be able to experience these losses and be able to hold positions like this and then take them into a loss. Instead, I'd have to do and undergo this entire cycle a few times, right? I think I've said on this channel, I've blown like over 6 to 8 accounts. I've blown accounts. I have no problem speaking about that. I don't really care. Learn from me. Learn from my mistakes. Don't make my mistakes. As my dad used to say, do as I say, not as I do. I make mistakes. I'm not always the best, but I understand what can make someone really good. I've seen it happen, and I've seen transformations in my members month after month as they become funded. And again, if you want to become funded and you've gotten to the point where you understand your strategy and can execute this without having your emotions affect you, mentfunding is the place for you. And go get that Millie account. I'd love to have you funded with $1 million, and I'd love to have you on the channel and interview you. So let's keep talking about this. I'm sorry to go off track there for a second, but you can see price kept going. And once again, I looked to take a buy in here, and that hit break even. So again, right, it's an entire session of, at this point, break evens. All these might look good and look like they ran the profit, but they didn't. All these are break evens or minus ones, or even losses in terms of spread / commission. Then another buy, -1. Then another sell. There was a sell in here, or actually there might have been a buy. I don't remember. It was a -1. Okay. Then another sell. That, what did it do? Ran into profit, about 3% profit, and then hit break even. I took a break even on this. A lot of you, again, what would you have done? You would have been, go back to this equity example. You'd be in this area here looking to close, or you'd be in this area here looking to close, or you'd be in this area here looking to close because you're like, oh, we're back in profit, or you'd be in this area here looking to close because you had your losses for the start of the day right here. It starts going into profit, you close here, right? This is how we function. Again, another sell, ready to go short. Finally, I was like, okay, we're ready. Won the 6. Again, what does that 6% mean? That means that this would have taken care of every single loss so far and still put me into a little bit of profit. What happened? Break even. Another break even. Comes up, get into a sell. Again, holding it down. Do I exit here? Nope. Break structure. Do I exit it here? Nope. But now this is the important thing. A lot of you, especially those of you in smart money or looking for those higher R runs, are looking to exit this break. Why? Because you're like, oh, structure is shifting. Oh, I'm already down for the day. Oh, I took all these losses. My session is coming to a close. I need to just fucking quit. You know, I'll just do this tomorrow. I'll put in more money. It's fine. I'm at break even if I close at this point here, or maybe if I close here, I was at break even, right? And what you do is you forego your multiple attempts potentially of having this next equity run on your account. Because guess what? If you have this, it'll look like you'll never get anywhere doing anything. This is going to happen for retail and for smart money. But what happens is if you get here, right? Let's say this move, instead of just closing it like you would here, instead of closing that to be break even on the entire day, you hold that to then end up and allow yourself to run this entire move here. And by the way, I didn't close it here. I'm still running on this actually. I took partials here, here, and here, and looking for the next partial down inside of these areas. And you can see that we're actually coming right back up to break even right now. I'm break even on this right now. But what happens is you end up closing that right here instead of allowing your account to do and run this move that will then put you, in essence, up here. And what does that mean that you get put up here with your account balance? Well, that means that now this whole thing can replicate. Ready? So it starts down, goes up a little bit, comes down, goes up a little bit, comes all the way back down, comes up, goes all the way back down, and then you replicate it with the same kind of move. So what does this look to you? Well, this is what profitability looks like. And you do this for a year, okay? And what is that going to look like? Well, oi, what the fuck? Yes. Oh, baby. Right. You do that for a year. So let's play a fun game here. If you're still here, thank you for being on here. Thank you for the immense support on my channel. You guys are absolutely phenomenal. I'm so thankful for it. But let's play a little game here. Okay, here we go. Last one, I promise. Don't skip the video. Oh shit, don't skip the video, guys. I'm here. All right, boom. Okay, so what is this gonna look like after a month even, or a year? Well, zoom out now, right? Golden goose style. What does that look like to you? Let's draw this out with a fatty. Here we go, great. Right, let's look what this looks like. What does that look like to you guys? That looks like consistency and profitability. Those small things that you go through and you allow your emotions to deal with day after day, trade after trade, hour after hour, or month after month based on the type of time frame trader that you want to be. Over time, that consistency is what breeds this kind of overall increase on your account. And guess what? The fact that you're down in compounding doesn't just do this in a linear fashion. This ends up moving even faster. And more so something like this. Because all these things become quicker and become larger, right? You get this and it does things like that, right? Because it becomes exponential. And that's how consistency is made. And this right here is the type of trading and the type of traders I'm looking for mentfunding, and the type of traders that I have consistently been able to create through my mentorship. And again, there's no proof that, not proof, what the fuck? There is no guarantee that it's ever going to be you that it happens to, but check out my Instagram. Go follow me on Instagram and check that out. Now again, this was a quick video. It's not actually that quick at all. Shit, I don't even know what I'm talking about. But this was a video just to demonstrate and show you the importance of following your rules and understanding that high RR is going to be met with periods of this kind of dog shit. And even though this might have ran 1 to 50, there was a partial at around 1 to 10, another partial at around 1 to 20, another partial at around 1 to 35, or whatever this was right here. I think, actually, no, this was like 1 to 50, right? And all of those add up to being just above all the losses I took on spreads, commissions, and break-evens on the trades before. But that consistency is what breeds this kind of increase over time on your account. And that's a consistency that I as a prop firm want to look for, that I as a mentor want to instill in you, and that I want to make sure you guys understand. So as always, thank you so much for watching, guys, and I'll see you in the next one.